Hello everyone, welcome to the Ichimoku hourly analysis for the SP 500 for Thursday, January the 27th, 2011. Well, a continuation of the trend to the upside for the opening hour of trading, but this was on a doji type candle. The candle for the first hour of trading had a higher high and a higher low. And the doji type candle is a candle of indecision. This was actually a harami reversal pattern, and the next candle following that candle, we did have the change of trend to the downside. We had a candle with a fairly large red body and a fairly large range. That's the distance between the open and the close, which tested just below the Tenkan-sen. Now the market failed to close substantially below the Tenkan-sen, so that set the market up for a potential change of trend once again. We did have that change of trend with the next candle being bullish, quite a large red body, green body candle, larger than the previous body, and the bulls closed that hour of trading control. The final 3 hours of trading, however, were very indecisive type candles with either no body or very small bodies. This is as the market was testing the level around 1300, and we've highlighted this 1300 area, this round number, as being an area where the market would find potentially very strong resistance, and that's exactly what's happening here. So on this occasion, when the market tested up to 1300.8, we had selling coming in, and we had a bearish type candle with a large red body. The final hour of trading, once again, the market tested up to 1301, and we had a downside price rejection, as we can see by the shadow on the top. That's the buyers losing commitment, but we also had the sellers failing to take control of this market, and the sellers losing some commitment as well. Now the Tenkan-sen is holding a support, and that's the blue line here, and we can see that it held a support on the second last hour of trading. We should expect it to hold a support again, but certainly this area around 1300 is very strong resistance for the market. Further down below here, we can see from the candle in the second hour of trading that it traded down to roughly 1294, sorry. And we can see that that area is an area of a large zone of support where the market was testing on quite a few occasions, and we had buying coming in. So that's a very big area for this number. If the market does trade down over the next day or so, we should look to that area to potentially hold a support. Any break of that could be quite significant. Below there, we also have potential strong support at the window that was opened around 1292, 1291, which coincides with this area of previous resistance from these two major swing highs that the market traded in during the last week or so. Now, overall, though, the market is bullish because we're trading up above the cloud. So, big picture terms, we have a bullish market. We also have the market trading up above the Kijun-sen and Tenkan-sen, which means that in the medium-term and fast-term timeframes, the market is bullish as well. Now, if we do trade down to either of these indicators, we tend to look to them for support if the market's trending up. So we should look to the Kijun-sen, which is down here, the pink line, around roughly 1,291, and that coincides with this area around the window and these previous areas of resistance. So that's a very, very strong area of potential support. And then also look to the Tenkan-sen here, roughly around 1298 as an area of support. If the market does trade lower, then we should look to the cloud to hold as support. But if we look at the cloud, it's actually quite thin, and the cloud is, as we've said, an area of support or resistance. And in this case, because it's thin, it will offer a very minimal amount of support. So if the market does come off in a significant way and it interacts with this cloud while it's very thin, if we have any very strong side down momentum to the downside around here, then there could be a significant breakthrough there and some bearishness coming into the market in big picture terms. But we don't want to preempt that. The market is still trading a long way up above the cloud. The market will need to do a lot of work to trade down to around those levels. So we do need to watch the area around 1300 and certainly this area down to around 1294 for any potential support on the downside.